Good morning, all of you, and thanks so much for tuning into the trade setup today. I'm Niraj Shah. Well, there's a bit of a dichotomy between what the US market sentiment and the performance was yesterday versus how Asia is looking like. So let's get straight to that, and then a few other details. There's, of course, Chinese data which has come out, which I'll talk about a bit later on. But first, what the US markets did, and it was pretty okay, the performance that we saw in yesterday's session. So the end and the start were good. Tech bounced back, which was a good thing for the US markets. We found, I mean, NASDAQ coming off every single day wasn't a pretty sight, to be honest, even though it had risen so much. And it's just been a bit of a bounce. So from a bull's perspective, this is good news. Is it reflecting in Asia, though? I'm afraid not. At least when I saw the peripheral markets across, and not just KOSPI and HSI, the mixed bag. Nikkei, I think, was down a little bit. ASX wasn't particularly on fire. And I think we'll get KOSPI and HSI up on the screen. Those indices are showing some bit of an uptick. So, well, mixed bag, if you will, largely on the upside, but a few losers as well. What matters is the sentiment around the Indian bourses looking okay. And frankly, the sentiment around the broader market is probably still okay. The question is, can the Nifty not play a spoil sport? Because I think what's happened over the weekend might just have a day or two of an effect, right? So yesterday, there was a bit of an impact on the small caps, and wonder if today would be the same because the advanced decline ratio continued to look okay. The SGX Nifty will come up on your screen in just moments from now. And that is looking, it's not looking all that bad. And therefore, there might be some stock-specific activity that might continue. And I'll get to why and some of the other reasons as well about it. Now, firstly, the trade setup. I think the issue, though, is that yesterday, the index was looking okay for a better part of the trading day. But after it hit that zone of 11,550, 11,650 odd, it corrected. And that's essentially the zone from where the Nifty has been showing some signs of pressure. There are some key resistances out there as well from technical parlance. And therefore, be mindful of that. Well, I think mid caps and small caps could have some bit of outperformance. So therefore, that could be great. I wonder if large cap IT will take a bit of a breather after the breakneck rally yesterday. Everything was up and about, and maybe a small breather, but I could be completely proven wrong here. I'm not even trying to predict out here because IT is now in another orbit. People are ready to pay higher valuations. I wrote a piece about it on our website. I would urge all of you to go and read that. But IT is looking okay. The point is mid-cap IT could continue to do well because everybody will now take heart from the fact that, for example, today is Hexaware final day of reverse book building. Just keep in mind, all of you who have Hexaware shares, you could tender it. You could tell your broker to tender into the reverse book building. A lot of brokers also don't know how to do this, but you have to tender the reverse book building at a price that you want. A story on our website will tell you. Please log on and try and read about it if you want clarity. But the story will tell you how institutional investors are tendering in at a price of 465 to 475. So if you are a shareholder of Hexaware, you have the option of tendering in the reverse book building process at a price higher than the current market price. And the chances of it getting accepted might be high from whatever little I gather from traders. So keep that in mind. But what I'm essentially, the point I'm trying to make is Hexaware, Happiest Minds and Root Mobile, I mean, tech and tech-enabled businesses. The sentiment around technology is so good that mid-cap IT could have a good day. So let's wait and watch. And frankly, if you look at the stocks, amongst the stocks that went up yesterday and saw some massive delivery-based buying, mid-cap IT was present there. So let's talk about the key stocks that all of us should watch out for. And this list, I'm not saying, therefore, that because of this, there will be buying today as well, mind you. But I'm putting out statistics out there. Look at the kind of gains that happened to mid-cap names and the kind of delivery percentages. It was serious delivery-based buying. Now, viewers, this is important because all of these stocks would have higher volumes than average. I've not put that column out here, but all of them without exception would have higher volumes for sure. And despite that, the delivery percentages were so higher. So, I mean, Persistent was 37%, but the others had about 50%. Look at this list, for example. Teamlease, 81% delivery-based buying. It's a low-volume stock, but serious delivery-based buying there. APL Apollo, about 56%. Amber Enterprises, 42%. And mind you, these delivery percentages are on stock prices, which were northwards by 10%, 8%, 9%. So pretty strong there, the kind of gains that have happened to some of these and the kind of delivery-based buying that we've seen in these names. Should be interesting to see if there is further follow-up action. Watch out for all of these, as also some of the others, mind you. But this is just a broad brush list of some mid caps which had a very high delivery based buying percentage yesterday. So therefore, these are stocks that I would watch out for. I would watch out for some others. So in other key names, I would watch out for ICICI Lombard. Now, the reason I would do this is because yesterday in a move, RBI has exempted ICICI Bank from the Banking Regulation Act 49 with respect to shareholding above 30% in a company. Usually, stocks have to, or banks have to reduce that stake. But I think ICICI Bank has gotten this exception. So it doesn't do anything for ICICI Bank, mind you. But it doesn't have to spare its stake in ICICI Lombard and ICICI Prudential. And because ICICI Lombard is listed, this is important from Lombard's perspective, that overhang of, will ICICI Bank come and reduce the stake, and therefore will it keep the stock price tempered? That is the thing that goes away for the time being. I think it's a net positive for the ICICI Lombard stock. So do watch out for that one. That aside, some results that came out and PVR numbers came out. Not that any great shakes were anticipated, but compared to estimates, which were anyways so low, the revenues were slightly lower. The net loss just expanded. EBITDA loss expanded. And we still don't have clarity about when would multiplex operations start. I wonder why people would be wanting to go out and try and catch a falling knife. Because you don't have clarity. The business models are strong. Mind you, PVR has a lot of debt on its books compared to INOX. So you have to be mindful of that. And again, the stocks could do well. Mind you, I'm not a soothsayer. I'm just trying to think out loud that why would somebody want to catch a falling knife and buy into businesses which have so much uncertainty surrounding them? I'll wait and watch. Raymond, the numbers look bad. Revenues were down 88%. Net loss expanded quite in a big way. EBITDA loss 225 crores versus a gain of 99 crores. So not the best of quarters. Let's see if the stock reacts. As ITI, well, the stock has been a flavor, right? It backed some order from Bharti for 55 crores, but a telecom, a private large enterprise giving an order to a PSU name. All of that played out wonders for ITI, but the numbers looked very, very poor. Last but not the least, just mind you viewers, I don't know if this is a definitive thing or no, but money chases performance. And as much as there is an anti-China sentiment around, their numbers are improving. The latest data that I'll just read it out for you. Okay, we have it as well. That Chinese consumers have stepped up their spending in August, and which is a sign that economic recovery is happening. The retail sales in China rose 0.5% in August. The first positive report for the year so far. This is, of course, as per China's National Bureau of Statistics. The sale of communication equipment rose, autos rose 11.8%. But from the point of view that all through the year, that sales in China on an average have shown a decline of 15%, and now sales have risen, shows that there is economic recovery there, and money might chase that. So in a relative case of China versus rest of Asia versus rest of the other markets, money may want to raise, money may want to follow Chinese stocks, global money that is, and no blaming them. So be mindful of that. But more importantly, the question would be that on a placid day today, can small caps and mid caps continue their outperformance? Please be very careful when you're buying them. Some of the valuations were anyways high. So be mindful of that. Thanks so much for tuning into the Trade Setup today.